Hi, Roger Balzer Wealth Management, where we help you make smart financial decisions. I want to address one of the most common questions I receive from dentists, and it's a good one. Should I invest money or eliminate my debt? And I'm going to talk about how to find the right balance between debt and investing, if there is one. I'll touch on some mental roadblocks that often lead to irrational decisions when it comes to reducing debt. Now, let's get on to the question at hand. Who asks this question the most? Well, I've narrowed it down to a few phases in a dentist's career. For example, new docs in their first 0 to 5, they often ask this question a lot. They may have just finished school and are dealing with student loan debt while trying to establish their practices. It's a crucial time when they need to balance investing and reducing debt. Another group that frequently ponders this question is dentists who've been in practice for a few years but still have more debt than cash on hand. They might be making some sporadic payments towards your debt, but they haven't developed a consistent savings plan yet. But does the question of debt and investment, does it disappear for dentists in their 40s, 50s, or 60s who've been practicing for a while? No. Even at this stage, many are concerned about having enough cash to secure their future and potentially retire comfortably. They may also face new challenges like taking on additional debt during major transitions or improvements in their practice. I want to explore why some people feel the urgency to eliminate debt while others don't. One factor is the amount of time spent in school. Dentists often spend a significant chunk of their lives pursuing their education. They accumulate a lot of debt along the way. This can create anxiety and pressure to get rid of it very quickly and focus solely on financial goals. Another reason some dentists feel the pressure is the substantial amount of debt that they carry. Dental education and setting up a practice can lead to significant financial obligations compared to the average person. Dentists often have much higher levels of debt, which can contribute to the urgency of what I call debt reduction. Again, there's a lot of buzz in the financial world about becoming debt-free. Many financial experts advocate for eliminating debt as quickly as possible, and that resonates with a very wide audience. However, it's important to remember that dentists have unique financial circumstances, and their debt, it should be viewed through a different lens than the average individual. Now, on the flip side, some dentists don't feel the same pressure to eliminate debt because they've got higher income and more cash on hand. When the cash flow is strong from the start, the urgency to reduce debt diminishes. However, it's worth noting that having excessive debt can still hinder long-term growth. And finding the right balance, it's crucial. Your personal history and upbringing, that also plays a role in how you perceive debt. If you grew up with a negative association towards debt, it's natural. You want to avoid it at all costs. However, if you've witnessed success and financial stability around you, your view on debt, well, maybe a little bit more relaxed, if I could say that. Now let's address why investing now is important, even if you still have debt. One significant reason is behavior. By investing smaller amounts early on, you can learn how to navigate the ups and the downs of the market, and you develop a disciplined savings habit. Treating your retirement savings as a priority, just like you would with your mortgage payments, that's crucial for long-term financial health. Additionally, data and historical market trends support the concept the longer you invest, the better your chances of generating significant returns are. Time in the market is important. Being in the market is important. Even if you have debt, starting to invest early can give your money more time to grow and potentially outpace the interest you're paying on your loans. Now, I want to give you an example. Let's say you have $50,000 in student loan debt with an interest rate of 5%. On the other hand, you have an opportunity to invest the same $50,000 and potentially earn an average return of 8%. Mathematically, it makes sense to invest because the potential return on investment outweighs the interest you're paying on the debt. However, it's important to approach this with caution. Consider the factors that affect your individual situation. Not all debt is created equal. It's essential to evaluate the interest rates, the terms, and your overall financial goals. For example, high interest credit card debt should take priority over other investing, as the interest rates on credit cards are typically in anywhere from the 15 to 22% range. They're much higher than potential investment returns. Now, let's discuss finding the right balance between debt reduction and investing. It's not an all or nothing decision. You can work towards both goals simultaneously. It's about prioritizing and allocating your resources wisely. Simple work to consider. Start by building an emergency fund. Having cash reserves to handle unexpected expenses, that's crucial. It prevents you from accumulating more debt during emergencies. Aim to save at least 3 to 6 months worth of living expenses. Once you have your emergency fund, focus on paying off high interest debt aggressively. This includes credit card debt or loans with interest rates significantly higher than potential investment returns. By eliminating these high interest rate obligations, you free up more cash flow for investing in the future. At the same time, you can start investing a portion of your income in long-term retirement accounts, such as a 401k or an IRA. Take advantage of employer matching programs if they're available. By contributing to these accounts, you benefit from tax advantages and the potential growth of your investments over time. The key here is to strike a balance between reducing debt and investing. It's not about completely neglecting one or the other, but find a sustainable approach that aligns with your financial goals and circumstances. And finally, let's address some of the mental roadblocks that often hinder sound decision making when it comes to debt and investing. Fear and patience. Those are two powerful emotions that lead us astray. Fear of market volatility or uncertainty can deter us from investing, while impatience can make us rush to eliminate debt without considering the long-term benefits of investing. To overcome these roadblocks, educate yourself about personal financing and investing. Understand the principles and strategies that successful investors follow. Surround yourself with a supportive community or seek guidance from professional financial advisors that can provide valuable insights tailored to your specific situation. Remember, everyone's financial journey is unique, and what works for someone else may not work for you. Take the time to evaluate your personal circumstances, goals, and risk tolerance. Be patient. Make informed decisions. Don't let fear or impatience drive your financial choices, please. That's it for today's video. I hope this discussion shed some light on the debt versus investment dilemma that many dentists face. Remember, there's no one-size-fits-all answer. By finding the right balance and making informed decisions, you can set yourself up for long-term financial success. As always, thanks for watching. This has been Roger Balzer of Balzer Wealth Management. Stay financially wise. Do you have questions or financial matters on your mind? No worries. Simply chat with one of our advisors. It's easy, I promise. Whether it's a financial hiccup, a nagging question, or some past money mishaps or mistakes, we've got you covered. There's no judgment here. We've seen it all, and we're here to help. Just visit balzerwealth.com and click on the book free consultation link, and let's set up a chat. It can be a quick 10 to 15 minute question and answer for guidance or a deeper conversation if you're thinking about getting a financial advisor on board. Even if you just got a speedy, no strings attached question, fire it away to us at our email, Roger@BalzerWealth. We're here to help no matter what financial journey you're on.